In yesterday's class, we done the problem relating to the statement of affairs with some adjustments. Okay, what adjustment is given? Rent outstanding, interest on capital, depreciation on machinery, like that given. Now see, the next problem is Ram and Shyam are partners. Okay. Ram and Shyam are partners sharing profits and losses. Sharing profits and losses in the ratio of 3:2. Okay, in the ratio of 3:2. After charging interest on capital at 5%. After charging interest on capital at 5%. So how much profit and loss in the ratio is 3:2 means any profit is getting, these two partners are shared in this ratio. Okay, after charging interest on capital at 5%. Interest on capital at 5%. Next, interest on drawings. Interest on drawings is to be ignored. Okay, interest on drawings is to be ignored. On 31st December 2004, their position was as follows. Okay, and this is the information as on 31st December 2004. Their position was as follows as liabilities, amount, assets, amount. Okay, on that liability side is sundry creditors, sundry creditors 15,000, Ram's capital 30,000, Shyam's capital 25,000. Next, coming to the asset side is cash at bank 6,000, cash in hand 500, prepaid insurance 500, stock 20,000. Stock how much? Stock is 20,000. Sundry debtors 12,000. Furniture 1,000. Machinery 30,000. Total of the two sides is 70,000. 70,000. Now coming to the adjustments. During the year ended 31st December 2005, Ram had withdrawn 10,000 and Shyam withdraw 5,000 for their private purposes. This means what? Ram and Shyam withdraw some amount for their private purpose. It means drawings. Okay, drawings. On 31st December 2005, the assets and liabilities were sundry debtors 16,000, sundry debtors 16,000, stock 28,000, cash at bank 5,000, prepaid insurance 500, sundry creditors 15,100, expenses owing 300. Expenses owing means outstanding expenses. Okay, expenses owing 300. Machinery and furniture were to be depreciated at 10% per annum. Okay, machinery and furniture, these two assets are depreciated at 10% per annum. Prepare a statement. Prepare a statement showing that. Prepare a statement showing the profit or loss. Prepare a statement showing the profit or loss made by Ram and Sham Ram and Sham for the year ended 31st December 2005 and a statement of affairs as on the date. Okay, we'll prepare the statement of affairs as on 31st December 2005. So these are the, when was the balances? 31st December 2004. This year closing balance is next year opening balance, like that we assume like that. Okay, so this is an opening and this is an closing. Okay, now here capital is given. Now we find, this is like opening capital. Now we find the closing capital. Then how we find that closing capital? By taking these figures, means as at the end of 31st December 2005 we will calculate the closing capital of the two partners. After finding the closing capital, we will prepare the statement of profit or loss. We will prepare the statement of profit or loss. After that, we will prepare the statement of affairs as on the, at the end of the year is 31st December 2005. Now see the solution. Statement of affairs as on 31st December 2005. Liabilities, amount, assets, liabilities, amount, assets, amount. Assets, amount. Okay. Now in the pro forma statement of profit or loss, first is closing capital, add drawings minus opening capital, Okay, so any profit is getting, that profit is profit before adjustment. Okay, that profit is profit before adjustments less adjustment. That adjustments are relating to the depreciation. Okay, depreciation on any assets and interest on capital, any outstanding. Okay, now see here. So first coming to the asset side is sundry debtors. Sundry debtors is 16,000. Sundry debtors 16,000. Stock 28,000. 8,000. Cash at bank is 5,000. Cash at bank is 5,000. Prepaid insurance. Prepaid insurance is 500. Prepaid insurance 500. Next, the liability side is sundry creditors. Sundry creditors is 15,100. Okay, these expenses will be taken here only. There is an outstanding expenses. Outstanding expenses is 300. Okay, and this machinery and furniture are to be depreciated at 10% per annum. Okay, generally when we calculate the depreciation at the end of the year, we will calculate the depreciation. But in adjustments, any machinery and furniture value is given? No, only depreciation percentage is given. Okay, now we will take the values from the 31st December 2004. On that assets, we will calculate the depreciation. That is machinery. Actual machinery value is how much? Is 30,000. Machinery value is 30,000. On this machinery value, we will calculate the depreciation. Less depreciation is how much? Is at the rate of 10%. Okay, so on this 30,000 we will calculate the depreciation is at 10%. That is 30,000 into 10% means 10 divided by 100 is 3000 is the depreciation value. Okay, deduct this 3000. How much is getting? 30,000 minus 3,000 is 27,000. Okay, so on this day machinery value is 27,000 after deducting the depreciation. Next is furniture. Next is furniture. How much furniture value is? 1000. Depreciation also 10%. Minus depreciation at the rate of 10% means on this on this 1000 we'll calculate the 10%, that is 1000 into 10% means 10 divided by 100. How much is 100? So furniture is 900. Okay, now we'll find the balancing figure. Okay. Okay, asset side total is 16,000 plus 28,000 plus 5,000 plus 500 plus 27,000 plus 900. Total of the asset side is 77,400. Okay, total of the asset side is 77,400. From this 77,400 we'll deduct the liabilities. Okay, so that's 77,400 minus 15,100. 15,100 minus 300. 62,000. Okay, this 62,000 is what? Closing capital. That closing capital is a combined capital. Here two partners are there, na? Who are there? Ram and Sham. Okay, so this is a combined closing capital. Combined closing capital is balancing figure. Total of the two sides is 77,400. 77,400. Okay. Next is statement of profit or loss. Statement of profit or loss of Ram and Sham. Statement of profit or loss of Ram and Sham. What is the pro forma? Pro forma is particulars amount. particulars amount. Particulars amount. So we'll take the closing capital na. So that is combined capital as on 31st December 2005. Combined capital as on 31st December 2005 is how much? Is 62,000. Is 62,000. Next, add drawings. Add drawings. How much drawings? Both the partners Ram and Sham. Ram had withdrawn 10,000 and Sham withdraw 5,000 for their private use. So Ram withdraws his how much drawings is 10,000 plus Sham withdraws amount is 5,000. Total of the drawings is 15,000. Total is 77,000. Total is 77,000. From this we'll deduct the less opening capital. So that is combined capital. Both the partners na. That's why here I wrote the combined capital. When was the date? As a opening date is how much? As on 1st January 2005. As on 1st January 2005. How much capital? Both the Ram and Sham. Ram's capital is 30,000. Ram's capital is 30,000 plus Sham's capital. Sham's capital is 25,000. 30,000 plus 25,000 is how much? Is 55,000. Deduct this amount. 77,000 minus 55,000 is 22,000. This is what? This is a profit. Which profit? Profit before adjustments. Profit before adjustments. Profits before adjustments. Now we'll deduct the adjustments. Less adjustments. adjustment is interest on capital. Interest on capital, how much is percentage? Is 5%. Interest on capital is 5%. Okay, and the opening capital, interest on capital is 5%. So that is Ram's capital. Ram's interest is how much is the opening capital as a given in their financial position is 30,000. 30,000 into 5%. 5% means 5 by 100. 1,500. 1,500. Next is Shams. Shams interest on capital is 25,000. 25,000 into 5 by 100 is 1,250. Add this amount is 2,750. Okay, so deduct from the profit before adjustment, so that is 22,000 minus 2,750 is 19,250. This 19,250 is profit. Okay, profit generated during the year. Okay, how much is profit is getting? 19,250. If the profit and loss sharing ratio is how much? Sharing ratio is 3:2. Okay, how much profit is getting? 19,250. This 19,250 is shared in the ratio of 3:2 the both Ram and Sham. So that Ram's profit is 19,250 into 3:2. See here, 3:2 means individual ratio divided by total ratio. Individual ratio is 3. Total ratio is 3 plus 2 is 5. So that is 3:2 ratio means 3 by 5 is to 2 by 5. So that Rams is first person. So that Rams will take as an 3. Shams will take as an 2. So that Ram's profit is 19,250 into 3 by 5. 19,250 into 3 by 5. Next is Sham's profit. Sham's profit is equals to 19,250 into 19,250 into 2 by 5. Calculate this. 19,250 into 3 by 5 is 11,550. 19,250 into 3 by 5 is 11,550. Next, Sham's profit is 19,250 into 2 by 5 is 7,700. These are the Ram's and Sham's profit. These will be used where when we prepare the statement of statement of affairs as on the date is 31st December 2005. This will be calculated. How we calculate? On the liability side, capital plus interest on capital plus profit minus drawings. On that profit we write this amount. Now see here, statement of affairs as on 31st December 2005. As on 31st December 2005. Liabilities amount, assets amount. Liabilities amount, assets amount. And first coming to the asset side is sundry debtors. Sundry debtors is 16,000. Stock 28,000. Cash at bank 5,000. Cash at bank 5,000. Prepaid insurance 500. Prepaid insurance 500. Next, machinery value is 30,000 minus depreciation 10% is how much? Is 3,000. 30,000 minus 3,000 is 27,000. Next, furniture value is 1,000 minus depreciation 10%. Depreciation 10% is 100, that is 900. Next, coming to the liability side, creditors, sundry creditors. Sundry creditors 15,100. Next, outstanding expenses Outstanding expenses is 300. Next is capital. First we'll calculate the RAM. How much RAM's opening capital? RAM's opening capital is 30,000. Add interest on capital. How much interest on capital is? 1,500 plus profit. How much is profit is? 11,550. Add all this, we'll get the 43,050. From this, we'll deduct drawings. How much RAM's drawings is? 10,000. So total is 33,050. Okay, this is the RAM's capital. Next is Sham. Okay, Sham's capital is 25,000. Sham's capital is 25,000. Add interest on capital. Add interest on capital is 1,250. Add interest on capital is 1,250. Next is profit. If profit is getting, it will be added. If loss is getting, it will be deducted. Plus profit. How much profit is getting is 7,700. Add all these is 33,950. From this we'll deduct the drawings. Drawings. Sham's drawings is 5,000. Sham's drawings is 5,000. So deduct this is 28,950. $28,950. The total of the two sides is, assets and liability side is 77,400. 77,400. Okay, this is the problem and today's class.